What is the monetary system? A system in society where all resources, goods and services are attributed value and exchanged through money. The system is operated and controlled by banks. Society is comprised of a series of institutions that regulate and control the citizens, such as government, religious, legal and educational institutions. These are controlled by the monetary system. How was the monetary system created? Systems of exchange have existed for thousands of years in the form of barter, trade, and now money. Limited technical ability and scarcity of resources meant that they needed to be regulated in order to sustain the population. The monetary system that we live in today was created in 1913 when the Federal Reserve System was established. What is the Federal Reserve System? The central banking system of the United States of America, located in Washington, D.C. The Federal Reserve System controls the U.S. money supply and the policies that govern it. Central banks create money, whereas commercial banks distribute money that is already in existence. Why is the Federal Reserve System important to the global economy? The United States of America is the leading economic power in the world. The US holds veto power in the World Bank, the World Trade Organization, and the International Monetary Fund, all of which combined contain 189 countries worldwide. These financial institutions control the global economy. In 1910, a group of American plutocrats convened a clandestine meeting on a private island estate off the coast of Georgia. This is known today as the Jekyll Island Conference. The fractional reserve banking system was fabricated at this meeting. What is the fractional reserve banking system? The system by which the world's banks make money. How is money created? All money is created by central banks and commercial banks through the fractional reserve banking system. There are two ways money is created in our current monetary system. The first, money is initially created out of loans. Central banks create money for governments in exchange for government bonds. Government bonds are instruments of indebtedness. Governments are required to pay back the money which was loaned. Commercial banks operate in the same way, except they loan money to the public and business. The second, money is created and expanded by commercial banks using the fractional reserve system. When central banks create money for governments, that money is then deposited into a commercial bank, which in turn creates 9 times more money than the original amount. The fractional reserve system requires that 10% of all deposits are held as the bank's reserve. The remaining 90% can be given out as new loans. The 90% does not come out of the original deposit. It is created by the banks as new money on top of the original deposit. This fractional reserve process is repeated continuously, meaning that for every deposit paid into a bank, 9 times that amount is created out of nothing and added to the global money supply. This system systematically multiplies the global money supply constantly, regardless of need and demand. In this system, all money is created by banks and is owed back to banks by governments, business, and the public. Money is invariably debt. Why is this bad? As the global money supply is created by banks through loans, those loans need to be paid back to the banks with added interest. But as all of the money circulating throughout the world was created by the banks through loans, the added interest does not exist in the money supply. The money owed back to the banks will always exceed the money in existence. This system is a system of perpetual debt. Any society operating under this monetary system can never be free of debt, and thus will always have to succumb to labour and austerity. As everything in society is based upon and reliant on the monetary system, it is the primary cause for almost every condition present in the world today.